Per usual, this channel is for educational purposes only and is not intended as financial advice. It's set up Sunday, and Friday we had J Powell at J Hole. He was more dovish than the market was positioned for and anticipating. Whether or not that will materialize until an actual cut remains to be seen. We still have a few data points left before the next meeting on the 17th of September. I'm in the one cut camp regardless. It was just, would Jay actually come out and be somewhat reasonable in the dovish camp? And he certainly softened his tone from the previous meeting where he threatened to hike based on the data. So to me, not to the AI, the AI thought that everything was hawkish. And, it's funny, no matter what happens, the macro doomers come out and they say, last time they started cutting, we crashed. Or they say, everything, inflation's going to go to infinity, whatever. I don't know if these glass half empty people ever make any money, but it's just funny that you can't win either way. So we had that happen on Friday, and on Sunday earlier today, we had somebody who may or may not be swapping some ill-gotten gains quickly and inefficiently on Hyperliquid to push down price, sell BTC, buy ETH. Apparently he's still made out a profit in that exchange. He has 8-9 billion left. Just the manner and the timing in which he's doing it seems very suspect. Maybe trying to evade whoever or whatever. Who knows? A lot of people, a lot of the meth heads especially, very, very sure it's a paradigm shift. More power to them. On the flows for the ETFs, we have BTC negative and we have ETH also slightly negative. Something to watch for in the next 4 weeks. 6 weeks, in the next 6 weeks into the end of September is going to be how big are outflows. Do we see continuous outflows? I like this clean. It's like killing a chicken. No mercy, sharpen the blade, clean cut, get the job done. So if you're going to be bearish in September, that's what you want. You want nothing wishy-washy. You want everything obvious. You want everything clean. So what do we want in September? 4 weeks of outflows would be great if we want to be bearish. And now I know nobody wants that. I really don't want that either, but that's just the expectation going into September, is that September seasonality not great. Now, this September could be the September to remember. It could be the September that breaks all of the odds, defies gravity. Not saying that's impossible. I just think it's hard to turbo position for crazy bullishness. I think holding crypto through September is fine. I think having some cash for September is fine. I think going 50x long into September may be a bit silly. Caught data for BTC on the bottom there looks slightly better. We have commercials green again, net long. And as I say here, you want retail. Retail is usually wrong. Large spec is usually wrong. You want them on the opposite side of whatever you are positioning. So assuming you are long here or wanting to be long, then you want both retail and large spec short, kind of like they were back here in mid-May, right? Mid-May, they were wrong. Price went higher. It took a minute. None of this stuff is instantaneous, but it's very good to see commercials back long again. ETH puzzling, still not the positioning you'd want to see. Doesn't mean it can't keep going, but in a vacuum, you're not long this. If you're purely playing positioning, you're trading something else. You're just not trading this because this is not in your favor. And again, it doesn't matter who it is. It doesn't matter what it's doing. We're talking about backtesting on all markets. We're talking about probabilities. This positioning display is not a high hit rate positioning. We'll just say it like that. So you got retail long, large spec long, commercial short. For ETH, there's people doing all sorts of stuff besides the basis trade. They're staking and doing a lot of fun stuff. But positioning wise, not what you want to see. This is the positioning you want to see. This is the Russell 2000. And as I was also tweeting out yesterday, the best thing going for ETH is the Russell positioning, because the Russell and ETH have been very tightly connected. Whether that's a sentiment thing, whether that's a beta to the Mag 7. If you think of BTC as one of the Mag 7, one of the top corporations, businesses, entities in the world, those have all done very, very well for the past couple of years, whereas everything else, the 493, have not. And then there's the 2000 zombie companies, the altcoins of legacy are starting to wake up, just as the altcoins of crypto are starting to wake up. And positioning is very, very short on large spec. if we look at the, flashbang everybody, this is the 60-day rolling for ETH and Russell, and it has a pretty high correlation. It's not random. There are times when it dips. There are times when it's higher than it is today, but it is fairly correlated. And that's something we've been talking about on this channel for at least a couple months now, that ETH, Coinbase, Russell, miners, Bitcoin miners, Dell, right? Just a random smattering of stuff for whatever reason has been pretty correlated. And for BTC, still below the midpoint of the power law. So to me, if your upside is the top of the power law, your risk reward here is the bottom of the power law versus the top. So to me, if we're still in a bull market and a bull cycle, plenty of room, no real rush or hurry. And you'll know if we start to break towards 150, then it's probably a different kind of environment than it's been over the past couple of years. Zooming way out, this is when you get it, you know it, right? It's not like, oh, are we there yet? Are we there yet? No, you don't need to ask because it's very clear, like it was in 2017, in 2020, where we just turn on the afterburners and we just go for it. So I haven't quite seen that yet on the power law. On the multi-year pitchfork, we're still in the top edge here. Risk reward near term, not great. At the end of the video, I have a spreadsheet that's going to break everything down by risk reward as I see it. But kind of just a lukewarm move here. It's still a decent move on BTC, don't get me wrong, but it's not like it was in April, right? We've moved up quite a bit since April, as has ETH. And on the daily cloud, we are starting to drift inside of it. Not great. Not what you want to see. If you're bullish, we have a bearish TK cross coming up. We almost certainly have a close in the cloud here, unless we W bottom again with a breakout above 118. We'll see this week. It's got to come pretty quick here. It's either sideways and down or straight down or chop till October. That's how I see it. If we do go down, there's a very high chance we try to go to 100. We'll see how far we get. But every day we're not above 120, I just say, okay, today could be the day. That's just where we are, right? And that's why it's hard to be turbo bullish alts, because in a bear situation, everything gets dragged down together. We also have the SPY looking interesting at levels. We've got the Qs that look even more extended. And all of this stuff can keep going. It's just, I want to see BTC above 120 first. But I think most of the money from now to the rest of the year may be in alts. And you're seeing that obviously with Bitcoin dominance rolling over finally for the first time in what feels like 65 years for some people. So I like this potentially down to 99. We'll see. I don't know what it's going to take to get us there. And then we risk end of cycle stuff beyond what we've already seen. But we need to give people a chance to feel like there's a dip to buy and then regain momentum quickly. That's what we need. But so far up here, tons and tons of chop. This is the BTC COT data again, but the AI cloud up here, which is a back-tested cloud settings based on the past 3 years of daily cloud or daily prices on BTC, also is turning over bearish. And we've also got, you call it an Eve atom, a U and a V, maybe a little inverted cup and handle. None of this looks bullish here. It just doesn't. So if we can get back above the midpoint of this range, if we can get towards 118, I can change my tune a little bit. But we have September. So again, just let it happen. Let it in. Embrace it. Get ready for it. Plan accordingly if that's what we're going to see. That includes alts, even though alts look like a lot of them that they're basing. ETH is not one of them that looks like it's basing. Again, based on risk reward, depending on what your risk reward may be, it just doesn't make sense to me to be long ETH here relative to everything else. And you could argue the same for BTC. You're better off trying mid-cap stuff down the list a little bit. That looks good. And it's the same argument for the Max 7 versus the 493. What's the better risk reward here? The 493. Does it mean that the 493 are actually going to do better? I don't know. We'll see. But that's where the setups are. So this has a bear div on it still. It still hasn't hit the top of the level. We still have a bunch in the validator queue. We've got flows negative on ETFs, right? Yes, we've got a ton of treasury companies buying. Cool. But this is also up 300% or whatever from April. So yeah, it can keep going. It's just, it's easier to push everything else up around it. That's it. Now, if you're in the ETH is going to 10K camp, that's fine. That's like a 2x-ish from here. Sure. But a lot of this other stuff at this point, and again, BTC is in the same camp, unless you see craziness on the power law. A 2x from here on BTC is 240 or less. A 2x from here on ETH is 10. Okay, now if you go down on the alt charts, it's a different story. And we're in that part of the ball game, late in the ball game, where you do see some rotation, you do see some wealth effect moving from BTC to ETH to Sol down the line, because on a relative value basis, it's just easier to push that stuff up. Sol also starting to quietly wake up here. Sol BTC, I don't have a chart for this video, but Sol BTC looks excellent. It is also at horizontal levels. Can Sol 2x from here? Might be a little tough at all-time highs, but it would probably be easier for Sol to 2x from here than ETH to 2x from here. And you really have to hope, if you're a Sol bull, that this is not a giant rising wedge. So yeah, I like higher highs here. I like a check at 184 as far as support, but this has way more room on it than ETH does. And really BTC, again, I'm throwing ETH under the bus, but the easy money has been made. That's the point. The easy money on ETH, the easy money on BTC. And so now you've got a lot of people selling both, and it's going to take a ton of buying on the ETFs or 401ks or whatever to continue to push price higher. Then you've got charts like ARB, plenty of room, right? Risk reward. Again, I have a spreadsheet at the end that'll calculate the percentages, but this is how you could start looking at everything, right? You can either stay in your investable universe and say, you know what, all I trade is BTC. I don't care about anything else. That's fine. If you're trading anything that you can trade on whatever exchange, there's some options, right? There's some options to trade. ARB is one. DYDX, getting close. Not quite breaking out, but getting close. It's above the cloud. Good things happen above the cloud. I don't like anything below 60 cents in September. It would be very weird if BTC broke down to 100K and alts like this broke up. That doesn't make any sense to me, but could be wrong about BTC. BTC could just chop around, and that could give plenty of room for alts that haven't done anything since really 2024. That could give them time to do something. So it's one way to hedge upside risk is by just trading alts that look like they've been basing for quite some time. SUI is another one. Ascending triangle. Better than ETH. Maybe even better than Sol. Easier 2x here than Sol. It's certainly an easier 2x than ETH, I'd imagine. INJ is another one, also looks good. Anything that looks remotely like this, just because I don't mention it in the video, but I did a pretty decent scan. These two are up there on the list, certainly. I'm going to talk about Hyperliquid because everyone's asking me about it, which signals to me huge crowdedness there. But good luck to you on that one. So again, does this go to 2x before some of this other stuff? I don't know. The easy money, to me, looks like it's been made. Unless you think this is going to go to 4,000, whatever that market cap would be. I just think it'd be tough. It's going to be tough from here. Assuming this is a bullish pattern that breaks up, the first target is going to be 65 to 78. And some people don't care, right? They love the exchange. They trade on it. It makes sense for them. That's fine. I just think as a trade relative to everything else, there's some easier stuff to do. Now, I would put this up against Coin, against Hood, against anything crypto and see what you see. But it just feels like, again, easy money's been made there. As we drift into legacy land, a few of these still consolidating at breakout levels. Galaxy, again, 2x here. Is this easier than ETH? Probably. Certainly easier than BTC. EVAV is another one. A lot of the EV charts look really, really good here. Starting to break out. EVAV on the 2-day cloud. This is a leveraged EV ETF. Looks good. And this is when I like to use leverage when we get momentum, when we start to break out, when everything around it in the index is starting to break out. This has been basing for over a year. It's a leveraged ETF, so it has vol drag, it has high fees. It's going to look like this most of the time, but yeah, why not, right? Why not? Here's EVAV against Tesla. Even relative to Tesla, the leveraged ETF to me, starting to roll up, starting to roll higher, has been basing for months. And if we just go to, Rivian is another one, been talking about that forever. This is the wrong cloud, whatever. Point is, like, now's the time. It's been 3 years. Why not? Starting to make higher lows over and over and over again. A single higher high, and it's probably good to go. This is not a quick idea. This is an idea into the end of the year at minimum. But one way to play this would be to trade EVAV, take what you can there, and then roll it into the single names out of leverage and just hold it. Peloton looks good as well. You know, like, I don't choose what looks good. I'm just looking at, based on the company, right? I'm just looking at the chart. Silly company. Chart's been basing for a while. Now, inevitably, some of these are just not gonna play out, right? This is Neo, another EV company coming out of a downtrend for the first time since 2021. So a lot of the components in EV AV look good, and of course, Figs quietly is already 2x'd from the low. I just like the chart. And back on this equal weighted versus market cap weighted train, RSP looks amazing. This again favors the 493 and not the Mag 7. This is market breadth. Another thing macro doomers love. They're going to find a way to tell you that market breadth is bearish here because it's too much breadth. That's probably what they're going to say. Okay, whatever. They're always looking to this for signs of market strength beyond the 493. And that's an all-time high. Doesn't get stronger than that. Tons of room on this. Tons of room on DJI, which is another classic Dow theory component where you need to see it on the S&P and the DJI, whatever. Tons of room on this. And even if we go XMAG, which is a ETF stripping out the Mag 7, that's a new all-time high. So there's lots of ways to express this idea that's not just Mag 7. And it's starting to finally work. Just like it's starting to work with alts, they're starting to wake up relative to BTC. Here's another fun one, BOAT. It's a shipping ETF, kind of in the same vein of IWM, low caps, boring. This isn't going to 2x. I think it has like a 9% dividend or something on it. But there are tons of charts that look like this. Financials, KRE, lots and lots of stuff starting to wake up. REMX, rare earths still look good. A lot of the metals still look good. You're seeing, just like BTC to alts, you're seeing rotation from gold to other metals. And other metals have a story. They have a US government significance, a strategic significance, whatever. That's helping lift this up as well, but it's coming out of a multi-year downtrend. So this continues to look very good. So here's the coveted Flashbang 2.0 and spreadsheet. I'll put a link to this in the description of the video, but what I did is I looked at a bunch of charts. A bunch of stuff is hidden on here, but looked at a bunch of charts, current price relative to where I think they could go based on fibs. And you'll notice ETH pre-move, huge gains, huge return. ENA pre-move, huge, right? But today, ENA and ETH in Link, the moves have happened. And when you're presented with a buffet, a cornucopia of options, I personally think if you made your money trading ETH already, then why not go somewhere else? I also put some cycle end targets on here. So if I had to pick like 5, okay. Now Wormhole hasn't broken out yet. Near hasn't broken out yet. Apt hasn't broken out yet. INJ hasn't been broken out yet. I could have put SUI on here. I didn't. DYDX hasn't broken out yet. These are probably the top 5 I would watch into October. They may move early. I don't know. This isn't like an alert service or anything, but I would put alerts at the resistance levels and at the fib levels and call it a day. I also have on here the list of legacy trades and their levels, because as the universe expands, there's much more to do that's not just BTC, Mag 7, and gold, stuff that's worked for years. There's tons and tons of other stuff to consider, should you want to do so, with pretty ridiculous percentages, assuming they're even close. Assuming these are even close to correct. I mean, Peloton, that's a pie in the sky right there. But some of these have a decent chance of high continuation. We'll see if any of these targets actually get reached by the end of the year. I'll revisit this in January. That's all I have for this one. And if you want to save a copy, you can make a copy there at the top. Give me a like, dislike, comment, share, subscribe, and happy trading.